Hello, friends. I want you to picture a quiet July morning. The coffee is on, the house is still, and you are looking at the calendar because rent, groceries, prescriptions, and the electric bill are all waiting for their turn. For millions of seniors, one payment arriving a day early, one medical cost changing, or one tax rule being missed can make a real difference. Not because anyone has done anything wrong, and not because you are expected to understand every complicated government rule, but because these changes are often explained in small print, scattered across different websites, and easy to overlook. Today, I am going to walk you through 3 real money changes that matter in July for older Americans. One affects when certain Social Security and SSI payments arrive. One could change the cost of specific weight management medications for some Medicare beneficiaries. And the third is a tax rule that many seniors still do not realize they may qualify for. Please stay with me until the end because this is not about panic, politics, or rumors. This is about knowing what applies to you, what does not apply to you, and what simple steps can help you protect your monthly budget. And before we begin, please take a moment to subscribe to the channel and turn on notifications. Every week, we break down Social Security, Medicare, retirement income, taxes, and senior benefits in plain American English, without the confusing language and without the scare tactics. A lot of people only discover these changes after they have missed a payment date, overpaid for medicine, or filed a tax return without claiming something they were entitled to claim. My goal is to help you see it before that happens. The first July money change is not a cut to your Social Security. It is not a new tax on your check. It is not a secret rule that takes money away. But it is important because July's payment calendar is different for some people, and missing the correct date can create unnecessary worry. If you are expecting a payment on the 3rd of the month, July may feel unusual this year. For July 2026, Supplemental Security Income, often called SSI, is scheduled for July 1st. People who receive Social Security before May 1997 or who receive both Social Security and SSI are scheduled to receive their Social Security payment on July 2nd instead of the usual 3rd of the month pattern. Most other Social Security beneficiaries receive payments based on their birthday. July 8th for birthdays from the 1st through the 10th, July 15th for birthdays from the 11th through the 20th, and July 22nd for birthdays from the 21st through the 31st. Now, that may sound like a simple calendar detail, but it can matter deeply when you are living on a fixed income. Maybe your mortgage payment comes out automatically. Maybe your prescription refill is due during the first week of the month. Maybe you are helping an adult child, a grandchild, or a spouse. Or maybe you simply need to know whether you can safely buy groceries before the weekend. A payment arriving on July 2nd instead of July 3rd does not mean you received an extra payment. It does not mean your benefit changed. It simply means the calendar is arranged differently for that payment cycle. This is exactly why I always tell seniors to avoid making financial decisions based only on what another person says happened to their check. Your neighbor may receive Social Security on a completely different day from you. Your brother may receive SSI while you receive retirement benefits. Your friend may have started Social Security before May 1997 while you began much later. 2 people living on the same street can have completely different payment schedules. The safest approach is to write down your own expected date. Do not rely only on memory. Put it on a paper calendar near the kitchen, write it in a notebook, or ask a trusted family member to help you make a simple monthly budget sheet. You do not need fancy software. You do not need a financial advisor just to know when your money should arrive. You need one clear place where you can see your payment date, your bills, and your important medical expenses. If your payment does not arrive when you expected it, do not immediately assume the worst. The Social Security Administration advises people to allow 3 additional mailing days before contacting Social Security if a payment is missing. Of course, if you use direct deposit, you may also want to check with your bank because processing times can vary. But the important thing is not to panic. not to call a number from a random text message, and not to give personal information to anyone who claims they can fix your Social Security payment for a fee. Think of July as a good month to review your money rhythm. Look at what comes in first. Look at what goes out first. Does the rent come out before your Social Security payment? Does your Medicare premium come out of your check? Is there a utility bill that always arrives near the beginning of the month? Sometimes the problem is not that a senior has too little money coming in. Sometimes the problem is that the timing of the bills is completely out of step with the timing of the income. A simple call to a utility company, landlord, credit card company, or insurance company may allow you to move a due date closer to the day your income arrives. Not every company will agree, but it is worth asking. You have spent decades paying bills, working, raising families, and taking care of others. There is nothing embarrassing about asking a company to align a due date with your actual payment schedule.
The second money change beginning in July could be especially important for seniors dealing with obesity-related health concerns, high prescription costs, or limited retirement income. Starting July 1st, 2026, Medicare is launching a short-term program called the Medicare GLP-1 Bridge. This program is designed to give eligible Medicare Part D beneficiaries access to certain GLP-1 medications for weight management at a $50 copay per monthly supply. The program is scheduled to run through December 31st, 2027.
Now, please listen carefully because this is where many headlines can become confusing. This is not a new benefit for every person on Medicare. It is not automatic. It does not mean everyone can suddenly receive any weight loss medication for $50. And it does not mean you should change your medication without speaking to your doctor. But for seniors who meet the clinical requirements and have an eligible Medicare Part D plan, it could make a meaningful difference in monthly medical costs. The medications currently listed for the program include Foundayo, Wegovy, and the KwikPen version of Zepbound when they are prescribed for reducing excess body weight and maintaining weight reduction. The single-dose Zepbound vial and the single-dose pen are not included in this particular program. For some seniors, the cost of these medications has been a major barrier. They may have heard about them from a doctor, seen advertisements, or known family members who use them, but the out-of-pocket cost was simply too high. It can be heartbreaking to sit in a doctor's office and hear that a treatment might help, only to discover that the price does not fit your budget. This program does not solve every problem, and it does not apply to everyone, but it could create an option for people who previously had no affordable path. To qualify, a person generally needs to be enrolled in Medicare Part D through an eligible standalone prescription drug plan or certain Medicare Advantage plans that include prescription drug coverage. The program is nationwide, but eligibility still depends on your plan type, your prescription, your medical situation, and prior authorization through a healthcare provider.
The clinical requirements are also specific. One possible path is having a body mass index or BMI of 35 or higher. Another path involves having a BMI of 30 or higher, along with certain conditions such as heart failure with preserved ejection fraction, uncontrolled high blood pressure despite treatment, or chronic kidney disease at stage 3A or above. Another category includes a BMI of 27 or higher with conditions such as prediabetes, a previous heart attack, a previous stroke, or symptomatic peripheral artery disease. That may sound like a lot of medical language, and that is why you should not try to diagnose yourself from a video. The practical next step is much simpler. If you think this program may apply to you, make a short note before your next medical appointment. Write down the medication name you are interested in, your current Medicare plan, and the health concerns you want to discuss. Then ask your doctor or prescribing provider, do I meet the requirements for the Medicare GLP-1 Bridge? And can your office check whether prior authorization is appropriate? Your provider must submit a prescription and a prior authorization request for you to access the medication through this program. You do not need to sign up for a separate government account or pay someone to enroll you. The program does not require beneficiaries to register or opt in ahead of time. This point is very important because scammers often take advantage of confusion. Whenever a new health program begins, people may receive calls, postcards, emails, or messages claiming that they can guarantee coverage for a fee. You should be very cautious with anyone who asks for your Medicare number, Social Security number, bank information, or payment in exchange for access to a benefit.
Your doctor, your pharmacy, your Medicare plan, and 1-800-Medicare are much safer starting points for questions about coverage. Another detail seniors need to understand is that the $50 copay under this program does not count toward your Medicare Part D deductible or your true out-of-pocket spending total. In addition, low-income subsidies do not reduce that $50 copay. That means the program can still be helpful, but you should not assume that the payment will move you more quickly toward your annual prescription drug out-of-pocket limit.
There is another important difference. The Medicare GLP-1 bridge is focused on weight management use. People receiving these medications for type 2 diabetes, obstructive sleep apnea, or certain liver-related conditions may need to use their regular Medicare Part D coverage instead because those uses may be handled differently. This is one reason why your doctor and your drug plan need to be part of the conversation. Please remember that no medication is just about the price. A lower copay may make something more accessible, but the decision should still be personal and medical. Your provider should review your history, your other prescriptions, your kidney function, your heart health, and your goals. The right question is not only, can I get this for $50? The better question is this safe, appropriate, and worthwhile for me? For seniors who do qualify, this change could free up money each month for groceries, transportation, utilities, or other prescriptions. Even a modest reduction in healthcare spending can matter when you are retired. A $50 medical cost may still feel significant to some households, but it may be dramatically less than what a person was paying before. The key is to look at your own situation honestly and not assume the program applies simply because you are on Medicare. The third money change is connected to taxes, and I want to be very clear about this one. It is not a new Social Security bonus. It is not a $6,000 check from the government. It is not no tax for all seniors, but it could reduce taxable income for many people age 65 and older, and too many retirees still do not know that it exists. The IRS says that for tax years 2025 through 2028, eligible taxpayers age 65 or older may be able to claim an additional deduction of up to $6,000 per person. A married couple filing jointly may qualify for up to $12,000 if both spouses meet the age requirement and other conditions. The deduction is available whether a taxpayer takes the standard deduction or itemizes deductions. Now, let me explain why this matters. A deduction is not the same thing as a cash payment. A $6,000 deduction does not mean the government sends you $6,000. It means that if you qualify, it can reduce the amount of income that is subject to federal income tax. The actual amount you save depends on your overall income, filing status, tax bracket, deductions, retirement withdrawals, and other details. This is why it is dangerous when someone online says, all seniors now get $6,000. That is not the full story. Some people may qualify for the full amount. Some may qualify for less because the deduction begins to phase out for people with higher modified adjusted gross income. And some people may not owe enough federal income tax for the deduction to make a large difference in their final tax bill. According to the IRS, the deduction begins to phase out when modified adjusted gross income exceeds $75,000 for single filers and $150,000 for married couples filing jointly. To qualify, a person must be age 65 or older by the end of the tax year. The IRS also says taxpayers claiming the deduction must meet Social Security number requirements. For a married couple, this is especially important to check carefully. Sometimes one spouse is 65 or older and the other is not. Sometimes both spouses qualify, but the return is filed incorrectly. Sometimes a couple files separately without realizing how that may affect deductions and benefits. Your tax situation is personal, which is why a trusted tax preparer, volunteer tax program, or qualified accountant can be valuable. July is a good time to think about this because it is the middle of the year. You still have time to organize records, review retirement withdrawals, check pension income, and avoid surprises when tax season comes around again. You do not have to wait until February or March to discover that a deduction was missed or that your withholding was not enough. If you have already filed your most recent return, pull out a copy and look at it. Do not worry if the forms look complicated. You are not trying to become a tax expert overnight. You are simply checking whether your preparer asked the right questions. Were you asked your age? Were you asked whether your spouse was also 65 or older? Were you asked about your filing status? Did anyone mention the enhanced deduction for seniors? If you prepare your own taxes through software, make sure you do not rush through the personal information section. Many tax deductions are calculated based on answers you provide. If you accidentally list the wrong age, click the wrong filing status, or skip income information, the software cannot magically correct it. Slow down. Read each question. Keep your Social Security statements, pension forms, investment statements, and retirement account forms in one safe folder.
The IRS also reminds seniors that free tax help programs may be available. Volunteer income tax assistance and tax counseling for the elderly programs can help low to moderate income taxpayers and people age 60 or older. AARP Foundation Tax Aid also offers free tax preparation help at many locations during tax season. There is absolutely no shame in asking for help with taxes. You would not expect yourself to repair your own furnace without instructions. You would not expect yourself to perform your own medical test. Tax rules can be complicated, especially when you receive Social Security, pension income, retirement account withdrawals, dividends, interest, or part-time income. Asking questions is not weakness. It is smart protection.
One helpful habit is to create a tax questions page. On that page, write down questions as they come up during the year. Maybe you sold a small investment. Maybe you took money from an IRA. Maybe you started working part-time. Maybe your spouse passed away and your filing status changed. Maybe you moved in with an adult child. These life changes can affect taxes, and it is much easier to discuss them with a preparer when you have written them down. Remember, the senior deduction does not automatically remove all taxes from Social Security income. It does not mean every retirement dollar is tax-free. It does not replace the need to file a return when you are required to file one. It is one tax tool, and for eligible seniors, it may be an important one. The best way to think about it is this. It is money you may be allowed to keep from being taxed, but you need to make sure it is properly claimed.
So, as July begins, here is the message I want you to carry with you. First, know your correct Social Security or SSI payment date. Do not panic because someone else received money on a different day. Second, if you have Medicare Part D and weight-related health concerns, ask your doctor whether the Medicare GLP-1 bridge may apply to you. Do not assume you qualify, but do not assume you do not qualify either. Third, check whether you or your spouse may benefit from the enhanced senior tax deduction before another tax season arrives. These changes may not affect every single senior in America. Some viewers may only need to mark a payment date on the calendar. Some may have a medical option they did not know existed. Some may discover a tax deduction that reduces their future tax bill. But even one of these changes could make a difference in the life of someone watching today. You have worked too hard to let confusing information keep you in the dark. You have earned the right to understand what is happening with your money, your health coverage, and your retirement. Take one small action after this video. Write down your July payment date. Make a note to ask your doctor about the Medicare program if it applies. Or place your tax records in one folder and schedule time to review them. Please share this video with a friend, a parent, a grandparent, a neighbor, or someone living on Social Security who may not know about these July changes. And subscribe to the channel because I will keep bringing you clear updates that separate real information from rumors. Thank you for watching. Take care of yourself, and remember, knowing the rules is one of the best ways to protect the money you have worked your whole life to earn.